Thank you.
Hello, good morning, everyone. Hello, good morning, everyone. Can you hear me? All right, thanks for the responses. All right, thank you, everyone. Yeah, thank you. All right. It's a good time to get started. Um, okay. Good morning once again, and happy holiday. It's the Salah holiday, and of course, like we are aware, the market is not on holiday this period. It's very much available for us to trade, and I really do hope we're getting to spend some decent time with family as much as I am as well. Uh, Of course, you can still reach out to your account managers if you have any pressing issues that may require urgent attention. And all of our online channels are also very much available. All right, okay. So without further ado, this is our usual morning market review where we look at what's going on in the market and also with an expectation that we'll be able to pick a few entries and trade ideas from these sessions for today and also for the rest of the week. So every day we bring different analysts so that we can have different experiences. So it's a good time to start with the majors, and then from there we can start examining some other pairs. But just before I do that, I would like to um, head over to forexfactory.com to see the important news events that may impact price for today. All right, my name is Tomiwa Agbola, and then I'll be our host for this session. So yeah, give me a second while I switch to forexfactory.com. Um, Hobson, I wasn't saying anything. I wanted to switch to forexfactory.com, but now there is audio. Please confirm you can hear me and that you can see my screen. I have Forex Factory off now. All right. I have from Akim Odejide and a BJ Ode. I hope I did justice with your name. All right. Thank you very much, Philippe Bodo as well. Okay. So I believe it's I'm audible, and then you can also see my screen. All right. So today, Tuesday, 18th day of June. What do we have? Okay. Earlier today, 5:30 a.m., we got a cash rate report from Australia. So again, at intervals, I'll be checking the comment section to see what the messages that have been dropped for me. All right. So I was saying earlier today, 5:30 a.m., we had the cash rate data from Australia. And as we can see, the Reserve Bank of Australia retained its cash rate at 4.35% as expected. That's keeping borrowing costs unchanged for that's like the fifth time now since it was last raised sometime towards the last quarter of 2023. Also in line with the forecast at 4.35%, the same figure here. So we may not have seen good volatility for that because the rate is unchanged. Also, around 1:30 p.m., we're also, which is now the focus anyway, we're going to see or get the core retail sales for the dollar 1:30 p.m. Of course, this is a very high impact news that we should be interested in. We're going to see some volatility in the USD around that time. The USD core retail sales and retail sales, important economic indicators, they track the month-to-month increase or decrease in consumer spending in the US in most retail categories. And since consumer spending accounts for about 2/3 of the US economy, this makes them important indicators of the health of the overall economy. We're going to get data 1:30 p.m. We're going to get data for retail sales and core retail sales. The retail sales, like I said, reflect the monthly estimate of all consumer spending, while the core retail sales excludes automobiles, even building materials and some other items. So prices for these products tend to be volatile. That's for the exclusion now. And this metric is a strong indicator of economic health and is used to gauge whether the economy is contracting or expanding. So as it is, a reading, by the time the actual result is released, a reading that is stronger than the forecast is generally bullish for the USD, while a weaker than forecast reading would be bearish for the dollar. So exactly 1:30 p.m., by the time we get the actual report here, if it is greater than forecast, then we can expect dollar to continue the bullish run. If it's lesser, then it can be bearish for the dollar. So that's it for retail sales expected 1:30 p.m. All right. So that's it for fundamentals. Now we can switch to MetaTrader 4 to check out what the technicals are saying. So a second while I do that. Hold on. Trying to switch to MT4 now. Okay. I have MT4 up now. I would also need us to confirm we can see my screen. If you can see my screen in the comment section, just help me type MT4. Okay, I'm also getting a lot of increase the audio. Please, can we confirm the audio is good? I'm saying one or two feedbacks from people saying that I should increase the audio. Please, can we confirm the audio is good? Audio is fine. Okay. All right. Thank you. So please, you may also want to check your end too. All right. Thank you. All right. Akim Odejide is asking if you can set pending order for which pair with this fundamental. Okay. So because it is for the dollar, that means the major pairs, the pairs with dollar, the Euro USD, the Pound USD, the USD JPY, USD CAD, the major pairs generally, you can expect some good volatility on them for that particular news at 1:30. All right. Okay, so this is the dollar index. This is the dollar index. Um, I see MT4 no longer visible. Sunday is saying that my MT4 is no longer visible. Please, can we confirm this? Okay, all right, thank you. So it's from your end, Sunday, please. All right, so I have the dollar index up now. And then, of course, with the dollar index, once we understand the strength or weakness of the dollar, we'll be able to apply this or relate this with the other major pairs. Okay, so for a while now, of course, since we got the FOMC data last week, Wednesday, the dollar has remained bullish, has remained bullish. And then for a while now, I've been talking about the MPE trading pattern, market structure. I still have it here, market structure, price level, and entry. So if we're looking at structure, of course, we have uptrend or downtrend. And then even the structure is also confirming that we do have an uptrend. And then the recent news has also favored or is in line with the structure. It's also in line with the structure. So we have that bullish run. We got this pullback and then a new high, higher high, and then we got higher low. Also, at this point now, it also gave us a double bottom, which is further confirming the bullishness. So from this moment now, we expect price to give us or create a new high, create a new high, create a new high. So if I'm bullish, if I have a bullish bias for the dollar index, then I can expect the likes of Euro USD, Pound USD to be bearish, and then USD CAD, USD CHF to be bullish. So it is with this idea now that I'm going to be approaching the rest of the majors. My time frame for this analysis is daily. It's daily. I like to start with the daily time frame to have a long-term view of the structure. I can then switch to a much lower time frame for entries. All right. So that's for the dollar index, and then we have a bullish bias here. So for Euro USD, it means that I'll be looking for sell opportunities. Now, this is the Euro USD. And then I also remember from the last session, that was last week Tuesday, I was also telling us about how fake outs can present fantastic trading opportunities. And what do I mean by that? For the sake of those that were not here, a fake out is simply a breakout that failed. So, for example, this is a trend line that I've been watching on the euro dollar. And then you can see that that trend line had previously acted as resistance for price here. Where my cursor is right now, it was resistance. And then price broke above that resistance with this green candle. Let me take out this box so that it's more visible. Okay, so price broke above that trend line and then almost immediately closed back below it. That's simply a fake out, a breakout that failed. If this didn't fail, we should have seen an aggressive move after the breakout happened to the upside, but that was not the case. Almost immediately, price fell back below that trend line, and then we got that aggressive sell-off. We got this aggressive move to the downside. And then this is what we also saw when price broke again above that trend line with this green candle and then back below it, and again an aggressive sell-off. So because of this move now, we're beginning to see the retracement. We're beginning to get retracement. Of course, when that news happened last week Tuesday, created these strong bearish candles, and then so much imbalance around that area. And as it is now, this level is now acting as support for price. And then from that level, we're beginning to get a retracement. Now, this retracement can go as high as around this 1.08 level. Can go as high as around this 1.08 level, at least to correct some of this aggressive move to the downside. However, so what that also means is that if you check, let me take out this line so that it's visible. This level now previously acted as support for price. We had it here, we had this level here, the same level here, the same level here, the same level here, the same level here, multiple times. So as it is now, price is now back above that level. So currently 1.0725, this area is now acting as support for price. And don't forget, as it is now, we expect a retracement. We're very much expecting a retracement for price. So it may be a good time to take advantage of that retracement, at least somewhere close to 1.08 or back to this moving average, which is 50, moving average 50. So it may be a great time to take a buy trade and then take some decent profit from there to take advantage of the retracement, because the overall direction here is still bearish. All right. So what that also means is that you're an aggressive trader, can take a buy position about right now and then exit your position towards that moving average 50 or around 1.08, and then we now begin to look for sell positions from there. Of course, you would have gotten a decent profit. All right, so that's it for the euro dollar. For the euro dollar now, I started from the daily time frame. And then I switched to H4 and even 1 hour. So what we're interested in here is to take advantage of the retracement to look for buy opportunities before we switch back to sell. Before we switch back to sell. Dennis, hopefully I get to gold. Hopefully I get to gold. Then Runo is also asking that the CPI for Euro is coming out by 10 a.m. Is it better to wait till after the news before taking a position? Right. Now, what we see here is basically technicals. What we see here is basically technicals. So what you do is by the time the news is released, you can then use that to trade. So what we're interested in here is to take these short positions, short trades, to take advantage of the retracement. We expect the retracement, or we can expect it to go as high as 1.08. Go as high as 1.08. Okay, so that's it for the euro dollar. Now I switch to GBP USD, again from the daily time frame. Again from the daily time frame. All right, quite similar to the euro dollar. And then also, I have this channel here, these two trend lines. And eventually, we got a break below that trend line. You can see how much this trend line has supported price. We got one here, got another one here, and even at this time. And eventually, we got a break below that trend line. So as it is, again, for the pounds USD, this area is now acting as support for price. This area here, this current price level. You can see it also acted as support for price here. Even here, it was resistance here. And then if you begin to look back, we'll see more multiple touches or tests of that same price level. So what it means is that because we are also expecting some retracement as a result of the aggressive sell from last week. So what it means is that as long as price stays above this price level, then you can expect the retracement to happen. Maybe back to this trend line, before we then get trend continuation. So that's the expectation for the pounds USD. However, if we get a break below that price level, we get a break below the support level, then we can expect price to maybe do something like this, break below it, give us a retest of that same price level, and then the trend continues from there. For pounds USD. Now, all of this is happening on the daily time frame. This is H4. This is what we have on H4. And then even H1, this is what we have. All right. So like I said, if we do get a break below this, this is the same daily level that I was showing us. So let me switch to daily time frame again. And then this is the support level here, around 1.26850. Around 1.26850. So the idea is if we get a break below that level, then we can expect the trend to continue up to this next support level. So this is it on 4 hours. Like I always say, when you understand the idea or you understand your approach, it really doesn't matter what time frame you are going to apply it, as long as you already have an overall view of the direction. That's exactly what we'll be looking out for, even if we switch as low as the 1 hour time frame. So this is the same daily level that we confirmed. So if we do get a break below that level, then we can expect the trend to continue towards the next support level at around 1.256 here, and expect the trend to continue. And that's for pounds USD. This is Olugbenga Babatunde now, still on Euro USD. Okay, let me switch to Euro USD to understand what you're saying. I'm on Euro USD now. There is a resistance around 1.074. 1.074. Okay. Let me see if I get that. 1.074. Which may not allow price to 1.08. Yes, of course. You may be correct in your opinion. You may be correct, but also note that we have a reversal pattern here. This is more like a morning star pattern, and it's happening on a daily time frame at a support level. I hope you understand that reasoning now. We have a morning star reversal pattern happening on a support level at 1.0725, and then this is 4 hours, and this is 1 hour. So again, because of the resistance at 1.074, what it means is that we can then allow price to close above that resistance. All right, it should be back now. The audio should be back now, and I just need to go back to sharing the screen. All right, Sunday, thank you for that feedback. And then I also have the screen back up now. Debola, thank you for that feedback. All right, thank you. Okay, so that's it for euro dollar. That's it for pounds USD. I also have euro card here, which is also giving us, or may give us, eventually give us a good trade setup. What do I mean by that? Now, this level here, of course, acted as resistance for price. We got a point here, a few pips to that point as well. We got it here again as resistance, here again as resistance, even at this point as resistance. And then eventually price broke above that resistance. But guess what? It did not continue the trend, which is also a case of a fake out, which is a breakout that failed. And now price is back below that resistance level. So what it means is that we can expect a retest of that level, which is what we're currently saying. Say we may get a retest of that level, and then price falls from there. This is exactly how I'm going to be trading EuroCAD, and I would also like us to add this to our watch list as well. It's going to eventually present a fantastic trading opportunity. However, if price breaks back above that level, then we may get a little bit of an upside movement before that finally plays out. So for EuroCAD, this is the daily time frame now. For EuroCAD, like I said, this is a typical example of a fake out. You see the whole of this point now, the whole of that range is now a fake out because price, since it broke above that resistance, couldn't sustain that move to the upside, and then is now back below that resistance. It's now back below support now. So what it means is that price may now give us a retest as resistance, and then from there we see a push to the downside. That's how I'm going to be trading EuroCAD. All right. I also want to talk about oil. For those of us who trade oil. Okay. I remember, I think it was last week or 2 weeks ago, price was around this support area. And then I was saying that from this point now, we could get a retracement back to that support level, sorry, resistance now, and then a push to the downside from there. And then the retracement is now back to the 50 Fibo level right now. It's now currently at the 50 Fibo level at this point now. So what it means is that if we do get a bearish pattern at the end of today, because this is the daily time frame, that's why I said at the end of today. This is head and shoulder here. It's supposed to be here. Yeah, that's it. So at the end of today, if this candle closes bearish, then we may see a push to the downside. We may see a push to the downside. But eventually, we do get a close above this resistance level. We do get a close above that resistance level, then we may see price further push to the upside. Yeah, I should get to gold shortly. Too slow to attend to most pairs. Okay, now Ojo Dale Akubo. What is important is for you to get the idea. We don't need to get to all the pairs. At least so far, we've done about 5 pairs now, or 5 assets. So, which is really good. So like I said, what is most important is for you to understand the idea, and that this you can begin to apply to any asset or instrument you are interested in. All right. So that's it for oil. And then I also have Euro pounds. I've added Euro pounds because, okay, after this, I'm going to switch to gold. I'm going to switch to gold so that we can see. I've seen a few requests for gold. So after euro pounds, I'm going to head straight to gold to see what we have there. All right, so this is euro pounds now. And then I remember I've mentioned this level for quite a number of times now, this support level for euro pound. But eventually we got a break below that support level. Ideally, I was expecting price to push higher from here. I was expecting price to push higher from that support level because in the past, it gave us double bottom here, and then we got an aggressive push to the upside. The same thing for this current level, we got an aggressive push to the upside. So the expectation was that at this same point now, we should have also gotten a similar pattern, but that didn't happen. Price has now closed uh, decently below that support level at around 0.85. And then we're beginning to see retracement. So for this retracement, what it now means is that by the time price closes this gap and returns to this same price level, if that bearish move would continue, then we'll get some reversal pattern here at this price level, and then price can continue to push lower. However, if we get a break back above this 0.85 level that has been support in the past, we expect that same level to be resistance now and then price push lower from there. But if we do get a break back above that level, then the whole of this would have been a fake out, a breakout that failed again, and then we can expect an aggressive move to the upside. So that's what I'm going to be watching out for euro pound. Okay, so gold now. Okay, so I have the gold chart up now. And then what do we have here? Again, this is the daily time frame. This is the daily time frame. And then on this daily time frame, we have the head and shoulder pattern. Let me label it. We have that. Here we have left shoulder. And then the right one at this level. Okay, now of course, the head and shoulder pattern is also a reversal pattern, a bearish reversal pattern, by the way. And since we got that, we can see price has been pushing to the downside. However, we need price to break that neckline before it is further confirmed. And that neckline is around this support level, which is around 2280. Now, this price level too, 2325, is also acting as resistance currently. Now, this has been quite sideways. This is 84. This is 84, and this is H1. All right. So this point now is, of course, acting as resistance. It's acting as resistance. And because we expect that bearish move, 2325 area is acting as resistance. Now, I started from the daily time frame. I showed us this head and shoulder pattern, which is a bearish reversal pattern. And then it will further be confirmed and strengthened if we get a close below the neckline. See it, if we get a close below this neckline. So what that means is that we get this, price closes below that area, gives us a retest, and then continue to the downside. So that's it. That's my expectation for gold. That's my expectation for gold. That's my expectation for gold. So I remain bearish here. David, US 100, and then that's from Olufunke, and then David is also asking to come again on gold. Okay, let me try to do that as fast as possible. Firstly, I recap on gold, and then we switch to US 100. Now for gold, we started on the daily time frame. This is what we have. I was showing us this head and shoulder pattern, which is a bearish reversal pattern. And then I also added that because of this head and shoulder pattern, then the way to trade it is to wait for a break of the neckline. And that neckline comes around this support level. Okay, let me do this. The whole of this area, the whole of that area. So as it is now, of course, we remain bearish here because we have seen the head and shoulder pattern. We remain bearish. And then to further confirm that bearish move would be when we have a break of that neckline. So we have this, price comes to this support area, breaks it to the downside, and then if we get a retest, fantastic. And then we can expect price to continue to the downside from there. So that's the approach I'm going to be using for the gold chart. All right, I hope you got that now, David. So now US 100 for Olufunke, US 100, of course, has been aggressively bullish, The stock market has been on fire. Okay, so what it means is that to join that bullish move, you may now need to wait for some retracement. So you can join that bullish move. You wait for some retracement. Now this is the daily time frame. And then I've already mapped out the levels that I'm watching. This is 1 hour. And then this was the last area of value that we got. So at this level now, because the price is really high, you may not want to join at this high level. So what you have to do here is to wait for some retracement. And then you now join the bullish move from there to take advantage of that trend. All right. I also saw pounds JPY. Let me see if I can touch on that as well. Now this is pounds JPY. Again, has been mostly sideways since price tested this 200 level. Has been mostly sideways. This is 8.4 now. and then this is H1. Okay, so what it means is that for pounds JPY, as long as price is above this 200 price level, this 200 mark, then I'll remain bullish for pounds JPY. I'll remain bullish for pounds JPY. I'll remain bullish for pounds JPY. Currently, we have a bearish candle. So at the end of this retracement, what it means is that we'll now be looking for opportunities to buy above this 200 price level. Popson is asking if we're expecting sell on US 100. Yes, we're expecting sell, at least to take advantage of retracement. Because the price is already too high, we don't want to jump in the trade right now. We expect some correction before we then take a buy. And that correction, of course, may also give us a sell opportunity. And then USD JPY. Again, USD JPY, also bullish. This is a trend line that I'm also watching, and you can see how that level has acted as support, as supported price. We have one here, we have two, we have three, even four, and price is still bullish. Price is still bullish. However, because of this high that we have somewhere around here, and in order to have a fantastic risk reward ratio,